Hi, I'm Peter Rose, founder of Longwood Currency Trading. I'd like to discuss with you today how to trade Forex for consistent profits. I think that in all of the interactions I've had with you folks out there, and thank you very much for those of you that comment on the videos and subscribe to the channel, obviously, but mostly those that take the time to send an email where I can communicate significantly with you where that's not possible in a video. It gives me the opportunity to get to know people better, and that makes me a better educator. You know, in working with folks on a consulting basis or taking my fast track course, it's my goal not to work with hundreds of people, but to work with just a few people who are really excited about Forex and are really interested in it and are willing to step back. Well, they have the experience to step back 6 months to a year at least of trading a live account for real money. Maybe a couple of hundred trades, 300 trades, so that you have the experience of what the Forex market is all about. And you really understand the benefits of it. You just can't seem to put the pieces together to make it work, to have those profits. But in interacting with you through email, it's interesting to get to know you and find out what your shortfalls and problems are. And if I can solve them without, taking you into a course or something like that, that's great, because I don't have a lot of time or take a lot of people to do the coursework, because it's 6 weeks. It's really intense, and I throw myself into it as hard as I'm expecting you to throw yourself into it. So I don't have a lot of time for that. I'm not passing my work, I'm not abrogating my responsibility as an educator off on somebody else or on a PDF file. It's me that you're getting. So it's vital that I get to know you and understand what your issues are, and maybe just help you out. Maybe all you need is somebody to point the direction for you, so I can help you do that. What's really difficult, though, getting across to someone who I'm just talking with through email, the importance of consistency in your trading. Consistency in the trading builds consistent profits. And so you have to learn, first of all, how to trade consistently in order to get consistent profits. That's not something you can answer in 25 words or less. Someone who's almost there, I can point them and they go, oh, okay, I got to do this, and I got to do this, and I got to do that. And I'm going to go over this, that, and this in this video. And if you have the experience in trading, I'm hoping that will help you. If you have any questions, again, feel free to email me. I know it's a very cumbersome process for you, because you want instant gratification and answers in a comment, and I don't do that in comments. I can't, because I can't do you service that way. So for those of you that take the time to email me, I'm going to take the time to work with you and respond back and communicate with you. But the importance of that consistency aspect is the most difficult hurdle that I have in overcoming the unrealistic expectations that folks coming into Forex seem to have. In the world of Forex education that's out there, that you're seeing in video land, you see these guys sit down and they make a couple of $1,000 a day or $50,000 a day or whatever. Let's just put those guys out. They may know how to do that, but they're not going to be able to teach you, because they've made so many mistakes in trading that they can't build back to a solid foundation of reasonable, rational methodology to show you how you can step your way through without setting off all the bombs that they had to set off to learn to do what they want to do. Let's just worry about paying your light bill for the year, a couple of $1,000 for the year. Let's worry about that first, because if you can't make a couple of $1,000 a year, then you're not going to make a couple of $100,000 a year. And that's where the consistency comes in, and nobody wants to hear that. Large profits come in two ways. Number one is that if you're an active trader then maybe 5% of your trades make up 70% of your profits for the year. Something like that. I think you'll find that through a lot of the hedge funds and large institutional stock trading funds and things like that. I think you'll find that those aggressive traders that have been doing things a long time, not just the guys that are doing mutual funds and just trying to flatline their profits, I think you'll find that the individual trader, speculator, is constantly out there probing into the market and taking small, consistent profits, which will add up to be a lot in the end of the year if they continue to do that. But then when the opportunity presents itself, boom, you go for it, you shoot the potatoes, and you come away with 70% of the overall profits that you'll make in those few instances of trading. Maybe 1 month of trading or 3 weeks of trading is going to account for 70, and sometimes they say sometimes 80% of their profits. And the reason for that is because they're, first of all, concerned about being a consistent trader. But you have to have a plan so that the consistent trading gives you enough money to make it worth your while to have sat at the table if you don't hit the big paydays. That's the gotcha with the consistent profits that everybody talks about, but nobody seems to really understand how to teach. And they don't teach that because 90% of the people that are asking for the information are looking for a magic pill. If you're looking for a magic pill, I'm sorry, but you're going to waste your time watching my videos because there's no magic pill. There's magic work, and there's secrets to trading that are out there for everybody if you slow down long enough to see what that secret is and how to integrate it into the process. Well, that's why you need a mentor. That's why you need to take a course. You know, I hardly have anybody take my courses because I dissuade everyone from doing that, or I just flat say, I don't want to work with you. Because number one, you're an asshole. Or more likely is that you don't have the patience to listen to what I have to say and to do the exercises over the six-week period or 4-week period, however long it takes you to get through the coursework. I've had the folks that have done fast track can read the whole PDF manual in 2 days. This is not rocket science. It's process. You learn simple things and you learn how to tie those simple things together to make a valid plan that will lead you to consistent trading. Once you get to the point of the consistent trading, that's the goal of the fast track program. Now, if you want to accelerate that and you want to look for those large places where you can push it all to the center of the table, then you have to have a larger bank to do that because you need a regular size bank to make sure that you're building consistent profits so that you're able to, significantly impact the replacement of your job income. Let's say you're making $60,000 a year. It'd be a really nice thing if you could make $20,000, $30,000 a year from your trading as you work toward accumulating enough money so that you have a large enough bank that you can replace your job income and quit your job. You got to remember that trading and building profits and putting them back into the account is different than trading and making your mortgage payment and your rent payment from that trading. Because a couple of large mistakes takes your profits in your trading account down so far that you don't have the money there that will allow you to make big profits. And so then you make the grand mistake of trying to trade for more money instead of just staying on the consistent course. I know that for a fact. I've been through that, so I understand the emotional pitfalls that you're going to have. If you want to trade Forex, the first reason that you need to trade Forex is to be consistent with small profits that will add up to some significant goal at the end of the year with a small account. So if you have a small account, let's look for trading so that you can pay your light bill. Because if you could pay your light bill, you could pay your mortgage and you can replace your job income. It's simple. But first you have to be consistent. You have to have rigorous discipline. Without that discipline, well, first of all, where do you get the discipline? You get the discipline from following guidelines that bring you success, and that you can see how simple it is if you follow those guidelines. Then you can become disciplined to that process, right? But if you're just being told to do something, where's the discipline that you need to bring to bear to execute those things? You don't have that. You just listen to somebody else. Oh, when the short MA crosses the long MA and it's Tuesday and it's not raining, then you take the trade. Really? Okay. So of what personal commitment do you have to that process? You've abrogated your responsibility for trading to somebody else. How do you expect to be consistent when they're not consistent? Oh, I had a $5,000 day today. I got a $2,000 day. Oh, I got $20,000 this month that I made. I mean, that doesn't make any. I mean, the guy had a $20 million account and he makes $20,000 in a month. That's, well, what are you going to do? You know, that's fine. But if you have a $10,000 account and you can make $200 a month, that's $2,000 a year, right? That's your light bill. Well, why don't we try to do that? And then if you want to move up to like a $30,000 account, now you can start banging away at your job income. This stuff is not difficult. The difficult part is having the discipline to follow a consistent trading plan, or a plan that allows you to be consistent in your trading, right? So the consistency, I think, is only possible in day trading. If you're a long-term position trader and you're working on an ATR that one week is 70 pips and the next week is 120 pips as things bounce around and things fluctuate, your rules radically change in their execution process. And when you are up on the long-term thought process, you're making what, one trade a week, or taking a position a week, or every few weeks, because you're not trading for 50 pips or a couple of hundred pips. If you're a position trader and you're trading for 50 pips, you need to rethink your process. If you want to be a long-term position trader, you're looking for 200-300 pips without any question. Otherwise, you're not getting paid for the time that you're spending sitting at the table. The danger in doing that long-term process and hoping that you don't get a significant pullback that hits your stop, and that you're not short stopping on a long-term goal, there's a dichotomy there that I don't think a lot of the long-term position people are grasping, because I hear that a lot of them that are watching these guys that are successful, they've been trading for 8 years, and so they can move into the long-term position trading, but they might not really understand how they got there to that point unless they came out of a day trading background and they were looking to accomplish the correct things. Because if you're learning the correct things to do as a day trader, you can transfer that information up into the long-term position trading, but you can't learn trading as a long-term position trader and end up starting to lose a lot of money as a result of that and say, oh, I've got to become more conservative and I got to cut back and I got to go down to a day trader. That way I can be flat at the end of the day. You will not be successful. You can't take long-term position trading principles and bring them down into a day trading environment or even a swing environment. You can't. I know it sounds crazy. If you want to talk about the math of that, or the emotional stuff, or the physics of how all this stuff works together, because it's all in harmony with the process of nature, I'd be happy to chat with you about that. But suffice it to say, if you learn the principles of day trading, and you can be successful day trading. You can be successful in any of the other types of trading, swing, long-term position trading, and even if you want to drop down and do scalping, you can be successful at that. If you're a successful scalper, you can't transfer that up into day trading or long-term position trading. But the thought process is just totally different. Scalping is as different from day trading or long-term position trading as a dog is to a cat. That's just the way it is. But what I've been saying all along through this video, we're 15 minutes in, we're talking about consistency. You build consistency through learning trading through day trading because you have more opportunities to fail to learn what not to do. And as Jesse Livermore said, when you understand what not to do, you're learning what to do. And when you know what to do, you can make a lot of money. But you have to go through that process of learning what not to do. There are far fewer things not to do than there are what to do. There's an infinite number of things that you can do things right, but there's a finite number of things that can go wrong. But most people are more interested in trying to figure out what to do to make money than they are not to lose the money that they have. And so they lose the money that they have because they don't think that that's the most important thing. Day trading provides that for you, because if you don't know what you're doing, you're going to lose a lot. That doesn't mean that you need to move up into long-term position trading where it's, quote, safe. It means you need to learn the first phase of what I call the life cycle of a currency position, which is entry analysis. The other two phases are position management and exit methodology. If you don't understand your entry theory, you're not going to have a position to manage or get out of. And so day trading is where I use my fast track course and working with people for learning what not to do. And you learn that very quickly. You learn fast from those mistakes. In 2 weeks, I can change somebody's total life once they get into the trading, because they won't believe what they're doing. Even though I'm working with them, it's tough to let go of your past thoughts. And you start out trading well because you're all excited and you're listening to what I have to say, and you're building the rules the way we need to build them, and you're going along and and you're watching your profits increase. And then in the week between when we have our maybe a conference call to chat, you come back and you go, oh my, geez, I made some mistakes and I've lost 10% of the account. I lost $100 or $200 on that $1,000 account that we're learning how to trade off of. Why? You lose $30 and that's a pizza. That's 30 pips. How did you lose the price of a pizza? How did you lose 30 pips? What happened to all the success that you were having that all of a sudden now, instead of losing 8 or 10 pips on a trade, you lost 30? What's going on? Well, I don't know. Blah, blah, blah. Well, I do know. You're not being consistent in the application of the rules that you have. See, it isn't so much that you're looking for consistent profits. It's that you're trying to be consistent in your rules and how you apply them. Once you break that consistency, how can you expect consistent profits? Well, you can't. And so you learn fast from your mistakes in day trading so that you can fix those mistakes. With a mentor such as myself that will demand that you not make that mistake again and will tell you what a shithead you are if you do make that mistake again. If you know what my background is, you know that I've been in martial arts teaching self-defense and karate for over 50 years. I've been in 57 years now in the martial arts. I'm still in the martial arts. I'm never going to leave that. I know how to teach important stuff. The stuff that I teach in martial arts is so someone can protect themselves in a disastrous situation in the street. And so it's based on principles and consistent application and consistent training. That takes a lot of time. Learning to trade currencies, that doesn't take any time at all. You can learn everything you need to learn to be consistent and to become consistent in that fast track program, 4 to 6 weeks. Now, to take the next step and to graduate into the more advanced methodologies of trading, compounding, for example, you say, oh, well, these guys are teaching compounding right from the start. Yeah, it's wrong. It's not good, sound education, and no wonder you're getting screwed up. Look, when you come into my program, you have to forget all the shit that's out there. It's 90% noise. And the stuff that's good, you can't tell the difference between that it's good and it's not good because you don't have enough background to make that decision. You're just going to watch the shiny lights go by and go, oh, that looks good. Oh, this looks good. Oh, let me try this. Let me try that. You can't. That isn't going to build consistency. So through day trading, you learn fast from your mistakes. There's no stress in day trading because no matter what happens at the end of the day, whether you're in profit or you're floating around and you're just taking the trade, at the end of the day, when it's time to shut down, you want to walk away from the trading platform, it's over. Everything closes out. Unless you have a runner, which is a position that has run past your original take profit point, and then you float a stop behind it and you go to bed. And then you let that run for 6 weeks if it's going to run for 6 weeks. But the no stress is that you don't carry trades over into the next day. You're not laying awake at night going, just I wonder how that trade is going. I need to stage in or whatever. When you're just going an all-in, all-out trader, there's no stress. You go in. When it's time to come out, you come out. When you are reaching the end of the day, if it looks like a five pip sprint that you could make in the next 15 minutes before you have to go to work, you go in and take the trade. If it only makes it 3 or 4 pips and you got to go, you cut the trade, you go. You don't wait for it. There's certain things that it has to do before you're going to go, oh, I'm going to stay with this and I'm going to float a stop. If you get that wrong, you're going to be consistently unprofitable and not profitable. In any event, if you follow the process of learning consistency in your trading, there's no stress as a day trader. Everybody says, oh, it's so stressful because I got to make these decisions within the 1 hour period of time before I have to go to work, or the 2 hour period of time. Or I'm going to work a couple hours in the morning, I'm going to trade an hour after I get home from work at night. Whatever it is you can do. I've had people that work full-time jobs and have families, and they're trading 4 hours a day. It just is a matter of how you can fit the trading in. But I'm teaching this stuff so that the assumption is you only have 1 to 2 hours in the morning before you go to work. That's the way it is. And at the end of that time, you cut it and you go to work. You're not worrying about your trades. You're not worrying about your positions. It's done. You only go back in the next day. It relieves all the stress of trading. If you hear somebody who says day trading is stressful, then they don't really understand trading and they're not successful. So you shouldn't listen to them because there is no stress in trading. If you know what you're doing and you have control over your loss, then there's no stress. In the day trading environment, it's easy to write simple rules that bring consistent profits. Now, consistent profits are smaller than what you would like to make. If you're trading a $30,000 account and you want to make 40 or 60% on your money a year, let's say 60% on a $30,000 account, that's $18,000. That's your rent, or maybe it could be your mortgage, or it could be a lot of money, or you could do 80%, or you could do 200%. It doesn't matter what you could do. The consistent approach is, I have a certain amount of money that I have to risk that trades a certain number of lots, and I can expect a certain number of pips per day, which translates into a dollar value for that size bank, which is a small percentage return against that bank. What's a small percentage return? 0.3 to 0.5%. Look, if you could do 0.3% against a $1,000 bank, trading one mini lot, that's $3. But that's 0.3%. It's $30 on a $10,000 account. It's $300 on a 10-lot account. What could you do with $100 a day? If you can consistently make $100 a day, 0.1% average every day that you trade, 5 days a week, that's, well, you're making $5, a 0.1%, $10 on a $10,000 account, $10 a day, 5 days a week, that's $50 a week, that's $200 a month, that's $2,000. It couldn't be any simpler to explain to you about the consistency of these small profits. And then, oh, all of a sudden you get a 40 pip profit day. And now you've made $400 for that day. Now, if you lose $400 the next day, then you're not being consistent in your trading. Consistent in your trading is that $5 a day, or $50 a day, or $500 a day, wherever you are at your scaling level. And then the big jump comes and you make all that money. You don't consider yourself a hero. All you are is you've hit a statistical good run. Well, then you could hit a statistical bad run. Yes, but the thing that we have control over is our risk. So if you limit your risk, then that catastrophic loss can only be that risk. I mean, I have to sit down and work through the math with you in order to explain this, but how to trade Forex for consistent profits is a process of learning from your mistakes, having no stress in your trading so that you enjoy that process, and that you understand that it's a very easy process to write simple rules that build consistency. Quit trying to write rules that swing for the fence. If you write good rules for consistent profits, the conditions in that rule will allow for you to benefit from the opportunities where you can make the big moves. But it doesn't work the other way. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.